Every single time you pay for something, whether you're tapping your card for a coffee or entering those 16 digits online, you're making a financial decision. The choice is usually simple: debit or credit. One uses your money right now. The other borrows it to be paid back later. So which one is the smarter move? It feels like a question we should all know the answer to, but a lot of us are just guessing. Today on Financial Essentials, we're going to break down the debit versus credit debate once and for all. We'll get rid of the confusion so you can stop guessing and start swiping strategically. This isn't just about paying for stuff, it's about making your money work for you. Let's get into it. First up, let's talk about the debit card. It's a straightforward one. Think of it as a direct pipeline to your checking account. When you swipe or tap your debit card, the money is immediately pulled from your available balance. What you spend is gone instantly. There's no borrowing, no monthly bill, and definitely no interest charges. This simplicity is its biggest strength. Because of this, debit cards are fantastic tools for budgeting. You can only spend what you actually have, which makes it nearly impossible to fall into debt. If you've ever struggled with overspending, a debit-only approach can be a great way to get your finances back on track. It's perfect for simple, everyday spending. You see the transaction, the money leaves your account, and you know exactly where you stand. However, that simplicity comes with some trade-offs. The biggest downside is that most debit cards don't earn you anything extra. No cash back on your groceries, no points for your gas fill-ups, no travel miles for that vacation you're dreaming of. You're just spending your money and that's it. Another significant point to consider is fraud protection. While banks do offer some protections, they are generally weaker for debit cards compared to credit cards. If someone gets a hold of your debit card information and goes on a shopping spree, that's your actual cash that has disappeared from your account. Getting it back can be a slow and stressful process. So while they are great for discipline, they lack the perks and robust security that can make a big difference. Now let's flip the script and look at credit cards. A credit card is essentially a tool for borrowing money. The bank or credit card issuer gives you a line of credit, which is a set amount you can borrow against. When you make a purchase, you're not spending your own money, you're borrowing from that credit line. At the end of your billing cycle, you get a statement that lists all your purchases. Here's the most important part. If you pay that statement balance in full and on time, you typically avoid paying any interest on those purchases. You get all the benefits of using the card without it costing you a single extra penny. It's like a free short-term loan. This is where credit cards can become incredibly powerful tools for your financial life. And the benefits don't stop there. This is where the world of perks and rewards opens up. Credit cards often come with fantastic incentives like cashback on every purchase, points that you can redeem for gift cards or merchandise, and travel miles that can make your next trip much more affordable. They also frequently include valuable extras like purchase protection, which can cover your items if they're damaged or stolen shortly after you buy them, and extended warranties on electronics. Plus, as we touched on, their fraud safeguards are top-notch. If your credit card is used fraudulently, it's the bank's money that's on the line first, not yours. This gives you a critical buffer while the issue is being resolved. So, when used responsibly, credit cards are not just a way to pay. They're a way to get rewarded and protect your purchases. So let's put them side by side and highlight the key differences. The most fundamental one is where the money comes from. With a debit card, you are using your own cash directly from your bank account. With a credit card, you are borrowing money that you need to pay back. This leads to the next major difference: impact on your credit score. Your debit card activity is not reported to the credit bureaus, so it has zero effect on your credit history or score. A credit card, on the other hand, is a powerful credit building tool. Every on-time payment you make helps to build a positive credit history, which is essential for getting loans for a car or a house in the future. Then there are the rewards. Debit cards offer very limited perks, if any. Credit cards are designed to offer rewards, from cashback to travel points, as an incentive for you to use them. So you can see they're fundamentally different tools designed for different purposes. One is for disciplined spending, the other is for strategic spending and credit building. Let's dig a little deeper into safety and fraud protection, because this is a really big deal. In a perfect world, we wouldn't have to worry about our card information being stolen, but that's not the reality we live in. And when it comes to fraud, credit cards almost always offer superior protection. Think about it this way. If your debit card number is stolen and a thief drains your checking account, that's your money that has vanished. Your rent money, your grocery money, it's gone. While your bank will investigate and you'll likely get the money back eventually, that process can take days or even weeks. In the meantime, you could be left in a very difficult financial position. Now compare that to a stolen credit card. When a thief makes fraudulent charges, they're spending the bank's money, not yours. You report the fraud, the credit card company cancels the card, investigates the charges, and you are not responsible for paying them. That buffer is incredibly important. It means your personal cash flow isn't disrupted while the dispute is being handled. That peace of mind is one of the most underrated benefits of using a credit card. So with all that in mind, when should you use each card? Let's get practical. You should probably stick to your debit card if you know you struggle with overspending. If the temptation to spend money you don't have is too strong, the hard limit of a debit card is your best friend. It's also the right tool if you are on a very tight, strict budget and need to track every dollar as it leaves your account. And of course, debit cards are what you need for ATM withdrawals to get cash. On the flip side, a credit card is the better choice in several situations. If you are disciplined and can confidently pay your balance in full every single month, you should absolutely be using a credit card for most of your purchases. Why? To earn those valuable rewards. If you want to build or improve your credit score, using a credit card responsibly is one of the best ways to do it. It's also the go-to card for making large purchases, booking travel, or renting a car, thanks to the enhanced consumer protections and perks that often come with it. Now, credit cards are powerful, but that power comes with responsibility. Let's talk about the common mistakes people make that can turn this useful tool into a financial trap. The number one mistake is carrying a balance from month to month. Credit card interest rates are notoriously high, and letting that interest accumulate can quickly snowball into a mountain of debt. Another huge error is missing payments. Even one late payment can trigger penalty fees and seriously damage your credit score. Some people make the mistake of only using their cards for emergencies. While it's good to have them as a backup, not using them for regular, planned purchases means you're missing out on rewards and opportunities to build your credit history. Maxing out your credit limit is another big no-no. It hurts your credit score and leaves you with no buffer. Finally, ignoring your statements is a recipe for disaster. You need to review them every month to check for errors, track your spending, and ensure you're paying the right amount. Ultimately, discipline is what makes all the difference between using a credit card successfully and falling into debt. So, what does a smart daily strategy look like that combines the best of both worlds? Many financially savvy people have adopted a hybrid approach that works really well. They use a credit card for all of their regular, planned purchases, things like groceries, gas bills, and dining out. This allows them to maximize the rewards they earn, whether it's cashback or travel points, and take advantage of the superior fraud protection. But here's the crucial part. They treat their credit card like a debit card. They only spend what they know they have in their bank account. To stay on top of this, they might log into their credit card account once a week and pay off the balance. This prevents any possibility of overspending or forgetting a payment. They keep their savings ready to cover the bill in full, track their spending carefully, and reap all the rewards without ever paying a penny in interest. That is the ideal combination, the discipline of a debit card with the perks of a credit card. In the end, it's not about debit versus credit. They aren't enemies fighting for a spot in your wallet. They're just different tools in your financial toolkit, each with its own specific strengths. The key is knowing which tool to use for which job. Use your debit card for discipline and direct access to your cash. Use your credit card for rewards, protection, and building your financial future. When you understand how to use them both the right way, you take control of your spending and make your money work harder for you. Thanks for watching. If you want more money basics explained in a simple way, make sure to subscribe to Financial Essentials. We'll see you in the next video.